Indian markets end in the red amidst mixed global cues. Nifty fails to hold 25,100 and sensex ends below 82,000. All sectoral indices closed in the red except for FMCG, realty and auto stocks among the top laggards in today's weak market.
Swiggy will sell its stake in Rapido to raise around 2,000 crore rupees, a move to sell Instamart on a slump sale basis to its subsidiary for cash. Will also add to its resource pool as it opens up fresh fundraise possibilities.
India Inc. expects FY26 GDP growth in the range of 6.8 to 7%. CII President Rajiv Memani tells CNBC-TV18 the GST cut will play a major role in achieving this goal. Also, India Inc. expects RBI to cut rates further.
Hello and welcome to Markets Forward, your go-to show where we aim to get you all the key data points to gear up for the next trading day. I'm Vamakshi and with me is my colleague Vivek Iyer. Well, hi Vivek, it has not been a great session so far. The recovery that we saw midday had been sold off into and we're marking the fourth consecutive day of decline. And a trend that we've been observing is, the Nifty has been posting lower lows every single day this week. So, it doesn't seem like, it's going well for the, if you're a bull, but if you're a bear, I think it's going quite well.
That's right. Good afternoon, Vamakshi. As you mentioned, another session where we saw lower lows. The Nifty did attempt a brief intraday recovery led by PSU banks, but that too got sold into. Most of the PSU banks, at one point of time were trading significantly in the green, but towards the end of the trading session, actually ended near the day's lowest point. Well, we have a lot lined up on the show, and now on to our first segment of the day. Sudarshan joins us now from the big wall with the top movers and shakers of the day. Sudarshan, over to you.
So it was another day of weak trading session, but one segment or one index that closed in the green is FMCG. So some of the stocks from that index that have closed with gains. So first one, HUL Nifty, top gainers around up almost 1%. Same move was seen for Tata Consumer and Jubilant Food. PSU banks still half day of the trading sessions. Most of the banks were higher, and one bank that continues to outperform and has been giving strong quarterly results, that is the Indian Bank. And today also at one point it was up almost 3%, but at the end this too also closed with a gain of almost 2%. After this, some of the stocks have reacted to news flows. First on the list or top on the list is Tata Motor. Yesterday, if you remember, we were talking about JLR has extended the production pause till October 1. So the real impact on the stock we have seen today, and the stock closed with a cut of almost 3%. Another stock that has seen a sharp fall is PV Fintech, because our colleague Yash Jain has reported that IRDAI is considering basically to ask insurance companies to cap commission charges. If this happens, this will have an impact on PV Fintech, and that's the reason stock was down almost 4%. Coming to SBI Card, yesterday we saw that monthly data came and it was positive for SBI Card, and that's the reason stock was up almost 1%. Minda Corp has released Vision 2030 document in which company is expecting revenue to grow almost 3.5 times to 17,500 crore, and on the back of that, stock has risen as much as 9%. Lastly, in that segment, Keynes Technologies has appointed new MD. Remember, last week we were talking to company after its MD had resigned, and company had said that within 2 to 3 days it will be appointing new MD, and today company has made that announcement, and on the back of that the stock has closed with a gain of 3%. Now, over the last few sessions, you would have seen that all the auto stocks have been moving higher on the back of GST cut and its impact on the sales of these companies. Maruti has made comments, Hyundai has made comments, but due to that, auto ancillaries, all the stocks have been moving higher for the last few sessions. Today also, all the stocks were up somewhere in the range of 6 to 14%. Munjal Auto was up 11%, Bharat Gears were up 14%, and similar move was seen for other three names also, Ask Automotive, Lumax Autotech, and Munjal Showa. Lastly, some of the stocks were notable movers. Adani Group stocks, after seeing a big move in previous few sessions, today it was a profit booking days for most of the names. Adani Total Gas fallen 8%, Adani Power has fallen almost 11%. Two stocks that have been hitting upper circuit continuously, and today also both these stocks have seen a big move, and those names are Zuar Industries and Tata Investment.
Well, thank you so much for that, Sudarshan. But, let's take this forward then. We have Mayuresh Joshi of Marketsmith India and Shrikant Chouhan, who is the EVP at Kotak Securities, joining us today. Good afternoon to you, gentlemen. This is Vamakshi. Now, I'd just like to ask you about, Shrikant, to you. Actually, the markets have not been doing quite well. After the near 1,000-point rally that we saw, we've cooled off almost 400 points from, the recent high. So, where do you think the market is headed now? Are we headed for more weakness in the coming days?
Yeah, good afternoon, everyone. So I think if we see the trend of the market, then we are seeing some correction in the market, but we cannot forget that we saw the rally of 1,000 points in such a muted phase of the market. Whenever there is such type of activity in the market, we see a little bit extended correction. Close to 25,000, 24,900, the market is having good amount of support. And around these levels, we should look for taking some specific stock bets in these markets, because I am of the view that the market is now going to spend time between the range of 25,000 and 25,500 on the higher side. So now we are very close to the lower boundary of the range, and we should look for taking some specific bets in this market.
Right, Shrikant, so you're expecting the Nifty to trade in a tight range between 25,000 and 25,500. Well, moving on, some news flow as far as Swiggy is concerned. Remember, the company plans to sell its stake in Rapido to raise just under 2,000 crore rupees. The company also plans to transfer Instamart to its subsidiary on a slump sale basis for cash. Vinny Motiwala joins us now to tell us more. Vinny, over to you.
Hi, thanks so much for that. So yes, Swiggy is going to be divesting their stake, that is 12% stake in Rapido. Now, this is two parts. One part is going to be sold to Porus. The other part is going to be sold to Westbridge. So Porus will be for Porus, the sale is going to be 10 equity shares as well as 1.64 lakh Series D CCPSs, which will be sold for Rapido. From Rapido, it will go to MIH, which is Porus. Now, other than that, do not forget, Porus is a shareholder of Swiggy with around 23% stake that they were holding as on June 30th, 2025. The other one is the company will be selling around 35,000 shares, 35 to 36,000 shares of Series D CCPSs of Rapido to Setu AIF, which is the Westbridge company, that is for 430 crores. So one is, the Porus one is 1,968 crores, the other one is 430 crores. That totals to around 2,500 crores in terms of the total money that Swiggy will receive for the sale of Rapido. Now, do not forget, this was in line with the guidance that the company had mentioned in Q1 FY26 as well. Apart from that, there is a restructuring that has happened as well, where the board has approved the transfer of Instamart business of the company, including all those assets and liabilities, to Swiggy Instamart Private Limited, which will be a wholly owned subsidiary of the company. Main purpose of this is to smoothen the process of Instamart being treated and now easily being treated as an Indian-owned and controlled company. Now, let's look at the cash balance and the cash book, like you can see. Now, what is the cash book? As on 30th of June, it was around 5,300 crores for Swiggy. Now, post this Rapido sale, they'll receive 2,400 crores approximately. So, overall cash balance at the end of Q2 would come somewhere around 7,750 crores. This is important because the cash burn in Q1 FY26 was around 1,300 crores. Now, with this cash, it indicates that the company can sustain for maybe 6 to 7 more quarters, which this cash, and if the cash burn remains at these levels of 1,300 crores. Now, key risks that come in. One, there's expansion plans that could come at risk if the cash starts depleting at a faster rate. Increased competition that's there from newer players as well as already from Blinkit, because Blinkit is expanding at a faster rate. They are expanding in terms of stores that are launched every quarter by Blinkit is around 250 stores, while Swiggy is adding only 40 to 50 stores. So there's a gap in that front as well. And cash burn for Zomato or Eternal is much lower than what we're seeing for Swiggy. So key risk coming in there, as well as the quick commerce business, the losses are widening much faster, though what analysts are highlighting that this is a positive move, at least in the short term, and that is what they're keeping an eye out on.
Absolutely, Vinny. Thank you so much for bringing us those details. But on to a CNBC TV18 exclusive then. As per sources, IRDAI has flagged off some concerns around high insurance commissions and distribution costs in meetings with insurers. Yash is here with more details on this. Yash?
Well, after the new IRDAI chairman took over, that was Mr. Ajay Seth, this was the first meeting between the chairperson and the CEOs of insurance companies. According to our sources, there were a few important strategic points which were flagged by the chairman, by the insurance regulatory chairman in terms of points that the industry needs to work on. And one of those important points was the concern around high distribution costs and high commissions which go behind selling insurance products. According to, of course, what we understand from our sources, GST has made a huge benefit for various policyholders, potential policyholders, in terms of bringing down premiums for them. The chairman expressed that these distribution costs and commission also need to come down to bring more benefits as far as potential policyholders are concerned. What we are also given to understand from our sources that the industry, certain large players of the industry suggested that there could be an option to explore what the mutual fund industry did with total expense ratio, where commissions and not the expenses could be capped as far as insurance companies are concerned. What we are given to understand post that is that the regulator, that is IRDAI, is expected to make subcommittees of insurance companies themselves who would be giving a presentation or recommendation when it comes to how capping can be done as far as commission costs itself are concerned. Apart from, of course, higher commission and higher distribution, there were various other important strategic areas. Claim servicing was one of them, penetration growth were other two sectors, social and rural commitment, motor third-party commitment were all those strategic areas which were flagged by the insurance regulatory chairman.
Thank you so much, Yash, for joining us. And that story did have an impact, especially as far as the share price of PB Fintech was concerned. That stock ended lower by over 3.5%. Well, we still have Mayuresh, Joshi, as well as Shrikant. Thank you, gentlemen, for staying on with us. Well, Mayuresh, let me come across to you. Do you track this particular company, Policy Bazaar? Especially, how do you feel this particular move, if it fructifies, will impact the insurance companies and especially PB Fintech?
Afternoon, Vivek. So again, I think that entire fortunes are dependent on how the insurance market itself grows. And therefore, I think when there is a lot of circumspect areas that probably still are existing in terms of how premiums might actually grow, what is the impact in terms of the cost structure itself? Because all these companies, specifically the life insurance companies, are running at elevated cost except SBI Life, which is in high single digits. So I think if you account for marketing store commission costs, they account for almost 21%. And therefore, I think how premium growth is expected to shape up. Obviously, the expectation in terms of premiums falling might be a spur factor for the industry as a whole. But does that really compensate in terms of higher costs that these companies have to probably go through? And ultimately, I think if there are lower commissions that probably get passed through, I think that is going to impact forward-looking numbers as well. So I think we have a neutral view of the sector, not just the life insurers, but the non-life as well. And again, ancillary players like PB Fintech as well, which might, again, get impacted depending on the fortunes of how the entire sector might probably be.
All right, thanks for that, Mayuresh. But moving on then, Minda Corp. This stock surged in trade on the back of management's bullish outlook. The company is expecting its revenue to jump almost 3.5 times by 2030. And Sudarshan is here with more details on this. Over to you, Sudarshan.
So Minda Corp stock has surged on the back of its Vision 2030 document. Company expects revenue to increase 3.5 times, EBITDA margin to increase to 12.5% and ROC to increase to 25%. And in contrary, net debt to equity ratio to decline to 0.3 times. And the focus going forward would be more on passenger vehicles. And that's the reason company expecting its contribution to increase to almost 25% from current level of 14%. And because of these reasons, stock was sharply higher.
Thank you so much, Sudarshan, for taking us through what exactly Minda Corp unveiled as far as their Vision 2030 was concerned. Well, another stock that gained in trade today was Bajaj Electricals. This was after the board approved the acquisition of Morphy Richards brand. The company has been marketing Morphy Richards products in India since 2002. Upasna is here with more details on this particular acquisition.
Well, the board has given its consent to acquire Morphy Richards brand rights in India and neighbouring regions from Glen Electric for a consideration of nearly about 146 crores. Mind you that the company is associated with this British brand since April 2002 through a licensing agreement for marketing and distribution in India. Now, company positions this brand in a premium category with product across categories such as kitchen, home appliances and personal grooming, which the company believes has a higher appeal and higher sales growth as compared to other categories of the company. Now, this strategic move is expected to strengthen the company's position in the home appliances and even consumer electrical category portfolio. With this acquisition, to sum up, the company will secure outright brand rights in countries like India, Nepal, Bhutan, Bangladesh, Maldives and Sri Lanka, as what is indicated in the press release. So the stock remained in focus today on the back of this.
Thank you so much for that, Upasna. But Shrikant, I'd like to ask you, in terms of all of these consumer durable sectors names, right? They've been, doing well on the back of that GST 2.0 reform. Now, what is your take? Like, do you have any sort of top picks when it comes to the consumer durable names?
See, most of these stocks are finding a lot of difficulties to sustain at higher levels. Despite there was news flow, we saw very limited sort of activity in almost all the stocks. But in this particular space, if we really have to focus on any one or two stock, then in that we feel Hitachi India, Hitachi Energy, that stock looks good, which is around 18,000, 19,000 sort of levels. But if we consider Havells or Bajaj Electricals or even let's say Voltas, there we are not seeing any specific strength. It is better if we try to exit from these levels at current levels, or even from the even if there is any rally from current levels, then that will be an opportunity to reduce exposure from this particular space.
Well, thank you so much, Shrikant, as well as Mayuresh, for joining us, giving us a view both on the technical aspect of the market as well as the fundamental ones. Well, before we head into a short break, we leave you with commentary on GDP growth. India Inc. expects GDP growth in the range of 6.8 to 7% on the back of GST rate cuts. Speaking at CNBC-TV18's event, CII President Rajiv Memani said nominal GDP growth remains a major concern and suggested that rate cut by the Reserve Bank of India could help ease inflation. Let's listen in.
I think GST will definitely help. I think firstly, the first quarter GDP growth was also was a very positive surprise, and from what we are seeing with the monsoons and the uptake because of GST on the consumption, just some of the early sentiment that we are seeing. We haven't seen the numbers as yet. I think 6.8 to 7% should be achievable. We are also seeing, if you look at steel, if you look at cement, the broader trend on the construction sector, which contributes a lot, that's very positive. We just saw yesterday mining sector is starting to show very positive growth. So I would say overall 6.8 to 7% is probably a safe number to go with right now. I think India's bigger challenge is not the real GDP growth. I think it's the nominal GDP growth. Yeah. Because from a tax revenue collection, from a fiscal deficit number, I think that becomes more relevant. I think that's where we'll have to see if inflation continues to stay as benign as it is, and with GST it may come down a little bit, currency stabilizes, then the likelihood is that the nominal GDP growth will be a challenge. So we're hoping that if RBI was to reduce the interest rates, in some ways, push for greater growth, and then if that has a mild impact on inflation and it comes to closer to 2 to 3% in that range, if it ends in that range, then hopefully the nominal GDP growth number should catch up.
Welcome back to Market Forwards. Well, now on to a CNBC TV18 exclusive. Steel Secretary Sandeep Poundrik expects industry to grow in the range of 9 to 10% in FY26 on the back of the GST rate cut. He added construction, autos and consumer durables are set to boost steel consumption in the country. And that's not all. On DGTR recommending safeguard duties on steel imports, he said imports from China have dropped significantly compared to last year due to safeguard duties. He is of the view that domestic steel sector should get reasonable pricing. Further, he said DGTR has recommended adding 2 more product categories from imports from China as well as Vietnam, and the decision on the safeguard duty is expected before November 1st. Commenting on China's anti-involution policy, he said Indian steel sector will not be impacted by this.
Well, that was an exclusive interview to us, but now let's go across to key corporate voices. The management of Zaggle has given an upward guidance of 40 to 45% as against their earlier expectation of 30 to 35%. The company further guided its margins to be in the range of 10 to 12%.
Next up is the Lodha Group. The management expressed disappointment over the corporate governance issue involving Director Rajendra Lodha. It added in a preliminary inquiry, wrongdoings worth 85 crore rupees was unearthed. The management added that the total fraud could exceed 85 crore rupees and the final impact will be determined after a detailed forensic audit.
All right, and before we wrap, we bring you some key market events to watch out for the trading session tomorrow, and Upasna is standing by with those details. Upasna.
Well, first up, let us look at the global economic cues. Coming to US, the US will be reporting its Q2 GDP data, even initial jobless claims data. Now, let us look at the key stocks that will be in focus on the back of corporate action. Stocks like Afcons, Infra and Gayatri Projects will be in focus as board meeting will be held tomorrow for the fundraising plans of both these counters. Now, Trualt Bioenergy opens for subscription tomorrow, while on the flip side, Sheshasai Technologies, Jaro Institute of Technology, Anand Rathi and Solar World Energy Solution, all these IPOs close these for subscription tomorrow. Now, PM Narendra Modi to inaugurate World Food India, and also PM Modi will be launching 1.2 lakh crore nuclear projects in Rajasthan. So all in all, looks like quite an eventful day tomorrow.
Well, thank you so much for that, Upasna. It looks like a clearly an eventful day tomorrow. With that, it's a wrap on this edition of Markets Forward. We will be back with more news and updates on the other side.